Good morning and happy holidays, everyone, and welcome to HCD's office hours for ESG. My name is Anthony Zepeda, and I will be your moderator for today's session. We're going to hold for just a minute to let more of our colleagues join us for today's session. In the meantime, we would like to invite you to introduce yourselves in the chat with your name and the region you represent, and we will begin in about 1 minute. Thank you. Okay, I think we are ready to get started. Again, welcome to this week's office hours for ESG and happy holidays, everyone. My name is Anthony Zepeda and I am today's moderator. If you're just joining us, please go to the chat and introduce yourself with the name and the region you represent. And a couple of reminders to get started is this office hours session is being recorded for public record. And a second reminder is that HCD policy does not allow for AI note takers in our public meetings. Please disable any AI note takers you may be using, as we are required to remove any of these AI note takers from the meeting. So we'll have to kick them out and you'll have to log back on. So just a quick reminder. Next slide, please. How to ask a question. Most of you are familiar with this, but we'll just do a quick reminder for those of you who are new. All questions must be submitted in the Q&A box. And if you look at the ribbon on your Zoom, it's just below, and you hover over it. There's a Q&A box. Just click on that and type your organizations and your question into the question box. And the ESG team will read your questions out loud at the end of the presentation, and we will do our best to provide answers throughout the presentation as well. Alongside our presenters, we have several HCD staff, including ESG representatives, specialists, and management who can help answer any questions you have during the Q&A session. And once more, just make sure to put it in the Q&A, as oftentimes they get lost. If you put them in the chat box, we do our best to monitor it, but oftentimes they can get lost in the chatter as different people have different items they put on there. Next slide, please. Please note that both the slides and the recording will be sent to all participants within approximately 2 weeks of today's presentation. You can always check the HCD YouTube page for previous recordings, trainings, and other helpful information as well. Next slide, please. And so we're going to go ahead and dive right into updates for today. But one quick note I wanted to share with everyone is that this presentation is going to seem very familiar if you attended last month's session. We're covering some topics that are very important as we move forward in the year ahead. So the format of this December office hours is a little different. It's more of a recap of what we've covered in terms of the new RFF process and the indirect cost calculator and some of the changes with the 2024 contracts as per changes to federal law. And also, we wanted to open it up for TNA, technical assistance. You may have questions. You can come off mute and ask questions, or you can ask them in the chat. And we really do invite you, if you have a question about an RFF or the ESG program, today's your day to submit it. It's just going to be a very low-key session, probably a very fast session, and we want to save as much time as we can to go over the Q&A. So with that, I'm going to jump into the updates for the 2024 contracts. Most of you are aware that prior to submitting your first RFF, you're required to submit your liability insurance forms. And that's identified in your standard agreement. It's a requirement. And your rep has probably already reached out to you on that. In addition, you have the authorized signatory form, so we can make sure to get your documents signed and so we can pay you as quickly as possible. And we would also encourage all of you at this point in the contract process where we're just getting started and the busy year ahead, please review closely the contract timely submissions sections. There are deadlines there that your organization will be held to as part of the contracting process. And we would be happy to assist you with those and work with you in terms of making sure your money gets spent. We want to deploy those funds in your community and reach out in any way we can to help you. There's another little note there at the bottom, COC quarterly reporting that's related to that. We will be providing quarterly updates to your COC in the region. And if you are the COC, you'll get them directly as well. But if you are a sub-recipient of the COC, we will be providing them reports in terms of how you're doing with your timely spending, meeting the requirements, meeting submission deadlines, just something that we'll be moving forward. We're going to be tracking on a quarterly basis. Next slide, please. And a reminder for your first RFF, of course, we're going to go through this more today, and we've been really, don't want to say hammering, but we've been echoing this point, might be the best way of putting it for the last 6 months in office hours. For your first RFF, it doesn't matter what the component is, for your first RFF, it's a full monitoring of all line items on the detailed expense report. And just a quick tip on that. For your first RFF, we recommend that you keep it very simple. We suggest using a staff time and just a few lines because we will be asking for substantial documentation for each line item. And it could be delayed in terms of you might have to reach out to another department to get billing information for staff and how it's broken down. We might need to for you to clarify how it's broken down and just keep it very simple. Work with your rep, and that will make the process go faster. We get that first RFF out of the way, and then we can start rolling in the process. Just another reminder that the billing for your staff time and various ESG activities, it begins at the start date is the date of the award letter, not the date that your contract was executed, but the date that you received your award letter. So for many of you, you may have received your award letter 3 to 6 months prior to receiving the finalized contract. So work with your rep on that one. They can help you as well in terms of identifying the award date if you're not aware of that date. And that way you can start the billing immediately instead of waiting for that, the date of the contract execution. Next slide, please. Excuse me, I'm battling a cold this week. And for those of you who haven't met all of us, these are your ESG team representatives. We have Sam, Giovanni, and Ryan. We also have Tuesday, myself, and Amanda, who also help. Tuesdays, you'll hear from her today. She's very helpful in terms of your RFFs, especially in indirect costs. She's our guru that we reach out to all the time. But in the event that you can't reach out to your rep or they're not available, please contact the ESG NOFA inbox. We monitor that Monday through Friday during normal business hours, and someone will respond to you within 24 hours. Next slide, please. And with that, we're going to stop at 3 points today to answer any questions you might have. And we really, just if you don't have a question on this, we understand, because I've covered much of this before. But if you have any questions right now, I'm going to pause and ask Amanda if we have any questions.
We have one question from Dee Dee in LA. The first RFF by component, is that the first RFF by component is 100%. Our first RFF for state rush was admin and we submitted 100%. Our second one is the first one for RR and we were preparing 100% for that one also. Dee Dee, let's talk offline because that's about rush and we don't need to talk about Rush with everyone else on here since that contract is with just LA. So, why don't you email if you want to talk about it, we can talk about it on a separate phone call. You can email me directly, Amanda, and Tuesday, or Anthony, or all three of us, and Tim, and we can set up a phone call with you and go over that. I just don't want to go into nitty-gritty details of Rush when you're the only one with that contract.
Thank you, Amanda. Yeah, yeah, LA is very special. They've got that
Yes.
rush grant. So
Special, but unfortunate special since the wildfires.
yeah, yeah, that's correct.
Um, the second question, when is the first RFF due? I believe, correct me if I'm wrong, it was 60 days or 90 days after the grant agreement was signed.
120.
100, wow, that was way off. Thank you,
Yeah,
Gio.
you're welcome.
120 days after the RFF is due.
120. And for any grantees on here, you can go in eCivis and look under the award file section. If you need assistance with that, please reach out to one of your reps, me, Sam, or Ryan, and we can assist you in finding that contract. And if it's easier, we can also send it to you. But all grantees have access to their executed contracts. The date of your contract begins when HCD signs it.
Yes. And I believe that's coming up for most of them, right, Gio?
That is correct, because a lot of them were executed around the same time.
Yes. So you will want to be looking for that now if you haven't already. And this question is for you, Tuesday. What qualifies as indirect cost? Can that be answered here? And the answer is yes, but it is kind of a complicated answer. So whoever answered or asked this, it's an anonymous attendee. We may want to set up a call with you. If you can type in whoever that was, we can set up a call because, like I said, it is kind of complicated. We have that spreadsheet, and we can happily go over all of that with you. But Tuesday, I don't know if you want to give kind of a short answer of that.
It's one of my slides and when we're in the discussion further on,
Oh,
but
okay.
yes.
Okay, even better. So
Yeah.
we will get to that soon, but we can also, if you want to put your name and phone number in the chat, we can reach, or email address in the chat, we can reach out to you and set up a phone call if that's necessary, if your questions aren't answered in our webinar today, because it is, like I said, quite complicated. And that's it for now, Anthony.
Thank you, Amanda. And yeah, just building off what Amanda was saying, indirect costs are can be a very complicated topic. You can ask 10 different accounting firms to define an indirect cost, and you'll get 10 different answers. We have to keep it within the context of the ESG program with the guidance provided by the federal government. And so we're going to cover a lot of that today, but if you want to really get down in the nitty gritty, it just depends also on how your organization is structured. If you're an accountant asking us, or if you're from the accounting team asking us, you're probably going to be more knowledgeable than we are, as we're not accountants. However, if you're a program staff or managing a program and you're trying to get a little insight, we can provide you guidance in terms of what indirect costs are in relation to ESG. But we would also highly recommend that you work directly with your finance team to see how indirect costs are structured within your particular agency.
Okay, we have one more question, Anthony, before we
Yeah.
move on. Is HCD initiating negative actions to counties that have not obligated all of the awarded funding within the 120-day period from the date of the award letter, since it has not been clarified in the embargo if the embargo has an influence on requests for proposal process? It is our understanding that the embargo does not influence the request for proposal process, but I believe, if I've been out for a week and a half, so correct me if I'm wrong, Gio, because I know you've been talking to Felicity about this. It's our understanding that it shouldn't affect the request for proposal because I believe a lot of other counties have gone forward with the embargo in place and have contracted with their subrecipients.
That is
But
correct. Yeah,
if
that
you
is correct.
are having issues, you need to have further conversations with Geo, and we can push that up the chain to Felicity and further if needed. But we know other counties have not had issues with the embargo.
That is correct. Yeah, Victoria, I will reach out to you directly after this. But essentially HCD ESG has not made any announcements that the embargo does impact awarding subrecipients at all, because other county entities have already done so.
But like I
And
said, if it is affecting you, you can email Geo and talk to us, and we can push it up to Felicity and further up the chain if needed.
And to build off that, we realize that each county is different and each county has their own set of specific requirements in terms of how they contract. We recognize that our intent is not in any way to slow down your process. We want to help you get the money deployed. We want to help you get this money spent. That's our whole intent with this. So if you feel you're having challenges, please don't step back and think that we're trying to do this. Reach out to us and we will work together and we will find a way to make sure that you are on schedule and that you're getting the money deployed in your community.
Yes, and that's what I mean. Like if we are the ones holding it up with the embargo, then let us know and we can push it up the chain. We just have to let upper management know that that's the reason why, so that they can do something about it. Okay, I think we can move on now, Anthony.
Great. Thank you, Amanda. Appreciate it. And Geo as well. So here we are for today's ESG office hours. And as I mentioned, a lot of it is a recap because this information is a bit complex and it might take a little bit of time to get used to. We just kind of changed the title a little bit of last month's slide, took out a few slides to make it a little more streamlined. And essentially, we're going to cover the 2024 contracts. We're going to review the new RFF submission process and the new forms. We're going to go over the indirect cost calculator once again, as that's always a tough one. And we could just do every office hours on indirect costs. And then we're here to provide TA on general questions. You know, that one was a great example that we just received from Victoria. Any way that we can help, you know, the questions that you might have for the program and how we can help you deploy the money in your communities and get your billing up to date. That's why we're here today. And we want to keep it somewhat light. It's the holidays. We all got a big workload and let's have some fun. Next slide, please. So on that note, I'm going to go through this pretty quickly because I covered most of it last month. But for those of you who are familiar with the RFF process, most of you are, and got a little note there for the 2023 contracts. Those are the last year's contracts; they're expired. But you would submit your RFF form, PDF it, sign it. You would also submit the detail expense report in an Excel format. You would then submit supporting documentation and client files. And then you make sure everything is entered into eCivis. You upload all that to eCivis. We get a notification and we go through it. However, we have streamlined the process with the intent to make it easier for grantees to submit RFFs and DIRs and supporting documentation. Really, our intent is to get this money spent. We want you to spend the money because just like you, we're subrecipients. The state of California is a subrecipient to the federal government, and they hold us to the exact same standards that we hold you to. So we have to have that money spent as well. And they check our quarterly spending and they check our monthly RFF submissions. So we're all in the same boat. So we understand what you're going through. We understand how it can be a bit onerous at times. The program, as I've mentioned before, has been around for 30 years with a lot of legislation added to it and a lot of requirements. So we're always looking to streamline the process. And on that note, let's go to the next slide. So for the 2025 RFF process, which is for the 2024 contracts for funding year, we streamlined the process. And we also are looking to more accurately track indirect costs through the life of the contract, as the tracking of indirect cost has been a real challenge for most of our grantees, as well as us, trying to keep track of it, making sure it's eligible. In the past, we've tried to reconcile it at the very end, but it is always very laborious. It takes a lot of work, takes a lot of time. And so our intent is to start tracking it throughout the life of the contract and to help our grantees track it through the life of the contract. We've combined the RFF form and the DIR into a single form and added detailed lines to make it simpler. We've also introduced the indirect cost calculator that you can use as a tool for calculating and tracking your indirect costs throughout the life of the contract. Next slide, please. And with that, I am now going to hand it over to Tim, who is the ESG program manager and our resident expert on the RFF process. Tim, take it away.
Awesome. Thanks, Anthony. All right. So I'm going to go ahead and share my screen here with everybody before we dive into our new detailed expense report / request for funds workbook. So this is also known as the DER or RFF, as many of us know already. So for those of you who attended our last month's office hours, you saw this presentation already. So this will be a refresher for those. For those of you who may have missed last month's office hours and you have not seen this before, this will be a great little demonstration and training for those who may not have dive into this yet and tried to play with it a little bit. So, like Anthony mentioned, this we tried to make improvements to this workbook and again combine the RFF form and the detailed expense report into one workbook. So to make it a little more streamlined and a little bit easier to input your data for your requests for reimbursement. So, so I will go ahead and start the beginning. So again, this is our new form here. Your ESG representative should have emailed you the new DER RFF workbook. So please look out. You can access this workbook via that email that was sent to you and to your organization. And also, it is available on the HCD website on the ESG webpage. And so if you go into the ESG webpage and navigate to forms on there, you should be able to download a copy if you did not receive it in the email. So there's a couple of different ways that you can access this new workbook. You can also reach out to your ESG representative directly if you'd like. If you maybe missed that email that went out and you need to get another copy of this workbook, they'd be happy to email you a copy. So that is available for you to ask for. So what I'm going to do is I'm just going to do just a quick demonstration of how to fill out this workbook and some of the new changes that were incorporated to this for the 2024 contracts. Okay, so as you can see on the screen here, we have several different tabs on this workbook. So the very first tab is the request for funds form, which we're all quite familiar with already. We did update a little bit of a few of the rows, but a lot of the format is the same as last year's, and so this will look familiar. And then following this tab here, we have an equipment tab, and then also our detailed expense report tabs by component. And so everything is filled out included in this workbook. So the way we have it designed, just for those who may not know, is the yellow cells right here are for your organization to fill out first. Okay, so please do not. It's in your best interest to not do things out of order. Realize sometimes we might want to fill out our expenses first and fill out the DER. So the way we have the workbook designed is to fill out the RFF tab first. Okay, so please make a special note of that because this will some of the numbers and data your information will actually carry over into the detailed expense report tabs, which is something that's new this time. So so that's a little less work on your end. So I'll go ahead and kind of start here. So all of the yellow tabs in this first box up here are to be filled out first. So if you're so the draw request number is to be filled in. So if it's 1, 2, 3, or so forth, and then you will put your organization's contract number, whatever that number is. You will fill out the reporting period that you're requesting your reimbursements for. So if that's going to be a single month at a time, you can do that. If organizations, if that's your process how to do that, that's fine. You can also do a larger reporting period. So you can do 2 months, 3 months, however large it's going to be that you're deciding. Okay. And then proceed to filling out your organization name, address, city, state, and zip code. And then over to the right here, you will fill out your ESG representative's name. So for those of us who are returning ESG subrecipients, you may have had a different rep during your 2023 contract rep. So just please note that some of those assignments did change this year. So you may not have the same representative as last year. So if you had, for instance, if you had Anthony last year, Anthony is not going to be processing these requests this year. And so you will need to make sure that you update this to your current assigned rep for this contract period. So make sure that you don't use the name from last time, that you update it to the most current rep that is assigned to you. Okay. The expiration of this contract period is November 24th, 2026. So that is when your standard agreement expires, not when the expenditure timeline expires, all of that. So just please note that this is when your standard agreement with HCD expires, and the expenditure timeline and due dates are prior to this date, and those are outlined in your standard agreement. And then lastly, you would fill out the contact person who's filling out this request for funds form, their name, title, email, and phone number. Okay. And then slightly below here, under the budget breakdown, you will fill out your approved budget. Okay, so every one of your individual budgets for your contracts are in eCivis. Okay, so if you're not sure what the numbers are, they are in eCivis. They're also in your standard agreement as well under Exhibit E, and so you can access your budget both as ways if you want to know what the numbers are. Okay, so please note that we do not have a single line separated out with indirect cost any longer. And so if you have indirect costs in your budget, please combine your direct costs and indirect costs together, and that will give you the total for each component. Okay, so we do not separate them out here. And so if you have $150,000 in direct costs for emergency shelter and you have $10,000 in indirect, please combine those together, and that will give you the total number. Okay. And so you would fill out your approved budget for whatever your budget is, and then these will auto-populate and stay here. And then if you are doing draws for 2, 3, and so forward, just please keep track of what you have previously drawn here. And so it will properly calculate what is left of your grant amount and the budget remaining. Okay. Okay, so as you can see here, so I filled out some of these required information here. And so, like I said, this is the first tab to fill out here, as well as your approved budget. So we're just going to put some numbers in here just to demonstrate real quickly here. So once we enter that, that will auto-populate over on this side as well. So, okay. And the certification section is the same as last time. So please, with every RFF that you submit, please answer every one of these questions that is required. Even if it's an NA, please answer those questions by selecting the appropriate answer on here. Okay. And then if any of these questions here, especially with question 4, if you do select a yes on question 4, this will then prompt you to fill out the second tab, which is the equipment tab here. And if that is applicable to you having acquired equipment in excess of $10,000, okay? So this may not apply to anybody, and it may not apply to anybody at all during the grant period, but it is definitely possible for some. And so if that is the case for your organization, if you do answer yes, please fill out the equipment tab that is on the second tab as well with the applicable information. For those of you who don't have who answer no to this, the equipment tab can be left blank. You don't need to do anything there. So, okay. So as you can see with the information I've entered here, let's just say I'm going to do an emergency shelter request for funds. Okay. So if I go over to the third tab here where it says DERES, you can see that the information I entered here on the RFF tab is now transferred over. Okay, so you don't have to. So previously on our old detailed expense report, you had to do a separate one. You had to fill out your organization name, your contract number, your draw number. All of that is going to be done in one space now, and then and then it will transfer over to your detailed expense report tab. So that's a nice feature you won't have to mess with anymore in doing additional data entry. So, but please note that any changes you want to make to these do need to be changed on the RFF tab only. So if you want to, like I say, so if you entered a reporting period of July 1st to July 31st, and you'd be like, oh, you know what, I need to make that a little bit of a larger reporting period. Please make the changes here because you will not be able to make them on the detailed expense report tab. So these cells here on the detailed expense report tab are blue, and so they cannot be changed. As you can see, I'm clicking on these and I cannot change. Okay. So if you need to do a larger reporting period, let's just say 2 months, just please make your changes up here on the RFF tab, and then those will auto-populate over onto this side as well. Okay, and something to note as well when you're doing column 6, which is your pay and billing periods. For those of you who are requesting reimbursement for, let's just say, some staff costs, and you have pay stubs and payroll that you're requesting reimbursements for, and let's just say you have a larger reporting period, and you maybe those pay stubs maybe they got issued in June, but they got paid in July. So, and you're trying to enter something that's okay. Well, my pay stub is 6/15/25. So when I try to do that, I get an error message, and you want to know why? Is because the reporting start period says 7/1. Okay, so if you do need to do an expanding, due to pay stub dates and pay dates and that sort of thing, please just expand your reporting period. So you can do it to any date. You can do it 6/1 if it's need to be larger. So you can do the any type of expansion of the reporting period on the RFF tab. So you do have that option as well. Okay. And then we do have the updated dropdowns as well. So for those of you who may not have seen this yet, so for instance, in emergency shelter, we have an activity dropdown. And so you see that there's 5 different options you can choose from. The most common options, this for those that do have the emergency shelter component in their budget, will be essential services and operations. So those will be the most 2 that are commonly used. Renovation, major rehab, and conversion are not typically done, but we do have them as an optional dropdown. So, but just know that the first 2 are most the commonly used. Okay, and then column 3 will if it's staff costs or non-staff costs. Okay, so if you have staff costs, if you're for the time for your agency or for uh, your subrecipient staff time, you could list the staff costs there. If they're not any staff costs, you would select non-staff costs. Okay, and then column 4 will be if it's direct costs or indirect costs. Most of your entries will be for direct costs because we want to see those direct costs on this detailed expense report. The indirect costs option will be, and that will be covered by but Tuesday after this demonstration here. So the indirect cost option will only be a single line item at the very end of each of your detailed expense report. Okay, so indirect costs are itemized mostly in the indirect cost calculator, which Tuesday will go over. But as far as on the DER, the indirect cost line item will be just one single line item, and preferably at the end of all your direct costs. So please do not put indirect costs in the middle of your DER or somewhere where it's hard to find. Put it at the very, very end, okay, as the last line item, and then in the line description you can put for the billing period you have. Let's just say you're doing 1 month. You could say June 2025 indirect costs. And you could put the de minimis that you're taking. If the de minimis this year is now 15%, it did go up from last year. So the new rate is 15, and you can just put the line item description there. So we don't need to know what the indirect costs are for. There's no backup documentation required for indirect costs ever. So you can just put just a simple description that it's for that billing period indirect costs. Okay, but Tuesday we'll cover that more in a little bit detail after we're done here. So, and then column 5 is, of course, you can list the vendor that the expense was for, and then column 6, all of these. Column 6, 7, and so forth, they're pretty much the same as what we're probably used to from previous years. The check number, the check dates, and the check total, and the ESG requested amount. So all of this is the same as well. Okay, so I'm just going to do just a quick example here. HCD, and we'll put okay. So my first line item that I did as an example, I did operations. And we'll switch this to staff costs since I put in payroll here, direct costs, and then I put an amount over here. So every amount that I add, this will auto-populate here. And then when I switch over to my RFF tab, you can see that the request this period is that same number. So this transfers over as well. So I'm requesting 1,500 for my request for funds this period. And so whatever we enter on the DER tab will auto populate over to that RFF tab. So a lot of this that did see this demonstration last month are already familiar with this process. So for those of you that are new this month who maybe missed this, this is the new process here. And so every number that you enter here on every single line item will auto populate and add up, and your total will auto populate over onto the RFF tab. So that is a little bit easier this time around, and so that's what we're hoping to make it a little bit easier this time. So the same exact process will be for all your components. So you have street outreach as well, homelessness prevention, rapid rehousing, HMIS, and administration. So all of your detailed tabs are here. So it'll be the same process for whatever component you're requesting reimbursement for. Okay. All right. And then last but not least, I'll just go over the signature part of completing this. So with every RFF that you do submit an e-service, please upload this completed workbook here as it is. And so we can see your detailed expense report and the filled out request for funds page. A new feature that we have added this year is an electronic signature within Excel. Okay. As you can see, you fill out your authorized person's name, who's ever authorized to sign the request for funds, that person's name, title, and date, and you can by double clicking you can electronically sign in the workbook. But we understand that this, depending upon your organization's version of Excel, you may not have this option available, and that's completely okay. So, however, if your organization does allow, and you do have the correct, and you have the good, let's just say, version of Excel that allows this, you can totally electronically sign within the workbook, and that's all you need to do. And you just upload the workbook into your eCivis submission, and you're done. Okay. For those organizations that don't have that option, or maybe you get an error message or anything like that for signing, not to worry. You can definitely do the old school way, like we did last year. So if you go to File, and if you want to do and you want to print a PDF, let me see here, one-sided. Okay. And you should be able to print a PDF just the single page of the RFO form. Okay, so for those of you who have any trouble with electronically signing within the workbook, not to worry. You can PDF the RFF page only, and then you can electronically sign from that point, and you can upload that signed RFF form as a separate attachment to your DER RFF workbook. So you do have a couple of different options in that case. So please note that we're not trying to make it difficult, but you do have a couple options for getting that signed form into eCivis. Okay. All right. Okay, so I think Anthony, I am all done with this portion, and I'm going to pass it back to you so we can continue on.
Thank you, Tim. That was very helpful. And did we have any questions at this point, Amanda?
Yes, there's one from Luz. Good morning. Sorry, I am jumping on late. My question is on the backup for the checks. What if the check was cut at Department of Finance, but it has not been cashed yet, so we don't have a copy of the cash check? Does the line need to go on the next RFF, or would something from DOF stating that the check was cut would work for backup? Doing these reports monthly, I am realizing I'm going to run into this problem whether the check was cut, let's say 11/25, but I'm sending the report at the end of the month and it hasn't been cashed yet.
Well, that one is down in the weeds there.
Yeah.
Anything from
I can speak to
Tim
that.
or Tuesday?
Okay.
If you have some sort of copy of your like the check register or anything that shows that the check was cut, nowadays it's really difficult to get your check requests back anyway, or your check copies back anyway. So it's understood that your check register or whatever whatever computer document you have that shows that a check was cut is enough.
Thank you, Tuesday. And was that the only question?
That's it for now.
Awesome. Thank you both for that.
And Lou said thank you.
All right. And we go back to the PowerPoint in just one moment here. Gio, did you need me to share my PowerPoint or pull something or one of us to pull it up? There we go. Awesome. Thank you so much. Appreciate that. All right. And we've wrapped up Tim. So if we can go to the next slide. And that was the question, the Q&A that we just got finished with. So go to the next slide after that. And here we are in everyone's favorite indirect cost. As I said, this is one of those, you're not necessarily going to get a lot of quick answers as we have to really think about many of these. And just a quick updates to tee it off to Tuesday. In previous contract years, many of you are aware that the indirect cost rate established by the federal government was 10%. As of October 2024, the indirect cost rate was increased to 15%. Now, this is the general guideline established by the federal government, applicable to the majority of agencies. However, indirect cost rates can be different due to a couple of factors. One, if you are a jurisdiction like a city or a county, your agency, which is receiving a variety of federal funds and a variety of departments, may have negotiated a different indirect cost rate. So you will need to check with them if you're unsure. If you're okay with that and you know your indirect cost rate, you're good. Also, if your agency receives more than 10 million annually in federal funds, you're required to have a negotiated indirect cost rate or NICRA in place. Once again, if you're unsure regarding your agency's indirect cost rate, we recommend checking with your finance team. However, for most agencies that are not jurisdictions or those receiving less than 10 million in annual federal funds, your rate will be 15%. So going to the slide, a couple of highlights. The indirect cost workbook has been updated, and we thank Tuesday for that. A little golf clap there. And it can be used as a calculator for each RFF submitted. And not all indirect costs are eligible. The indirect cost calculator is intended to help you calculate which activities will be eligible. And with that, we'll move it over to Tuesday, and she will jump into our favorite topic, indirect cost.
That's my favorite topic too. It's it's something that we're finding. There's lots of questions that come up, and I'm hoping to get through this quickly enough to have time for some questions. Just a reminder, though, real quickly, that as of 2024 grant year, the indirect cost is 15%, and not the de minimis indirect cost is 15% and not 10%. If you have a different amount, we need a copy. If you have a NICRA, we need a copy of your NICRA so that we can know how much you're supposed to be claiming. But the one thing to remember is that it's not a 15% of just every direct cost that you have. Some indirect costs are not eligible. Your grant itself does the way our budget is in eCivis, your grant does not have indirect costs as a budget component. So it means that because we understand that your indirect costs are going to be a flow thing, they're different every time because your expenses are different, and you can't really predict from month to month what your expenses are going to be. So we don't have a budget specifically for that, so we won't have to move funds around like we did last year. You'll not be entering your indirect costs separately in eCivis. Again, no budget, so you don't have to enter them indirectly in eCivis. As Tim mentioned earlier, it's going to be a single line on your DER at the very bottom of your DER, because you need to take all the expenses on your DER, put them in the calculator, see which ones are eligible for indirect costs, and then make an indirect cost claim for that. So what I did was I have updated the workbook that we used for your application, and I made it into a calculator for each of your RFFs so that you can use that. And the indirect calculator will help you determine what costs are eligible. Next slide. And this answers to the question that somebody had earlier in our Q&A box. Not all of our costs are eligible for indirect costs. The costs that are eligible are things that actually have indirect costs associated with them. It's direct salaries, wages, and fringe benefits, supplies and materials, services, travel, and up to $50,000 of each subaward. So if you are a grantee and you're subbing to somebody else, you can take 15% of your up to $50,000 for each of your subawards. And all of these costs are called modified total direct costs. Things that are not eligible in the modified total direct costs are equipment, capital expenditures, participant support costs. So that's your for rapid rehousing specifically, be your rental assistance, your deposits, stuff like that. Those aren't eligible for indirect costs, but the wages that are associated with billing for those things would be eligible for indirect costs, and that way you're not getting indirect costs for both sides of it. Grantee rental costs are not eligible for indirect costs, and any portion of each subaward of greater than $50,000 is not eligible. Next slide. So again, this is the calculator that we came up with, and to help you determine what you need to kind of keep in mind is that all of the areas here that are in white, those are costs that are you can take indirect costs for. If it's grayed out, you won't get an indirect cost for that. And when you fill out the tabs for each of the sections, it's going to automatically fill into the first page and let you know what it'll calculate how much your indirect costs are for. For example, this is a rapid rehousing section, and each line has a list, or there's a line listing for housing search and placement and case management and rental assistance. Again, rental assistance isn't eligible, so you would not be calculating that for indirect costs. Something I recommend from like what we just discussed with Tim and the DER, what I recommend on your DER is bundling your activity types, because then you have all your staff costs together, and you can take that cost and go, okay, all my direct staff costs with wages and benefits were $15,000, and you can enter that directly into your calculator and just put that $15,000 in there. And then if your next bundle is is for your rental assistance, things like that, and you've got $20,000 for rental assistance, you'll be able to enter that into a line here and see that it doesn't get an indirect costs. So if you bundle and group them together, it's easier for you to total them, because you're going to take the total for each type from your DER and put it into the calculator. So once you've completed your detailed expense report, direct costs, you're going to again subtotal each type of expense. So whether your expense was housing search and placement, or stability, case management, legal services, mediation, those kinds of things, or rental application fees, security deposits, you're going to have those as a bundle and put the total in your calculator, and the calculator will tell you how much you can take for indirect costs. And you can put that directly over into your DER, again, as a single line item at the bottom, because it needs to be at the bottom because you're telling us how much of what's above was eligible for indirect costs. And then you're going to total the amount of your direct and your indirect costs, and that will become your total that you're requesting for reimbursement on your RFF and in eCivis. Please include a copy of the indirect cost calculator with your RFF and DER in eCivis when you upload, so that we can double check that you've done your calculation correctly. Next slide. Special considerations for grantees with subawards. If you're our direct grantee and you're subawarding out, you're entitled to either de minimis or your NICRA amounts for indirect costs for up to $50,000. Oh wait a minute, actually I wanted to talk about, so and also your subgrantees can take the same indirect costs and modified total direct costs as you are. So your subgrantee are allowed to take those indirect costs at the 15%, or what your NICRA, or what their NICRA is too. Actually, if they have their own NICRA, they can do this. And then you take those direct costs as a single line item as a direct cost. So if you're a county and you've subbed with a provider and they're taking 15% in direct costs, you take that as a single line item as a direct cost to you. And that's not entitled to any additional indirect costs, but that's a single line item to you. And then you can take your indirect costs on top of that. Next slide. Again, and so this is what I was trying to cover before. You are allowed to take indirect costs on up to $50,000 of each subaward. As you reimburse each subgrantee, then you can enter that amount in your indirect cost workbook. There's a couple lines for your subawards, and you would put in the amount that you have reimbursed to your provider, and it'll calculate what your percentage is, and you'll use that as a single line item on your DER for your indirect costs. You need to keep track of how much you've reimbursed and how much you've claimed indirect costs on, because it's only up to that $50,000. And one of the things we've come to realize is that a lot of our grantees have already subawarded 100% of their grant and did not keep funds aside so that they could take indirect costs, which was an unintended consequence. If there's funding available, like everything hasn't been spent at the end, you can claim those funds back and take indirect costs at the end of the grant year, and we'll help you navigate that if that comes up. So ask your grant manager and we'll work it out. Going forward, we'll help you figure out how you can take indirect costs and not subaward everything out. I'm hoping that answered most people's questions, but I'm also hoping that people have questions that I can answer more specifically into specific points. Thank you. Next slide.
Great. Thank you so much, Tuesday. I always appreciate the review of indirect costs. Generally learn something new every time. And now I'll turn it over to Amanda. Amanda, did we have any questions in the Q&A regarding the indirect costs portion?
No, not right now.
Okay. Yeah, well, we can give it give about a minute if anyone wanted to type a question into the Q&A.
And raise your hand if you want to talk, if you want to speak to me directly too. Some of these are pretty intricate questions.
We got one question. We got a hand up.
We do have a question now. Our subrecipient will complete the DER for RRH. Do they complete the subaward portion and not the detailed RRH section?
I'm having trouble picturing that.
So that's from Dee. Our subrecipient will complete the DER for rapid rehousing. Do they complete the sub-award portion?
They should do the DER as it sits, and they can claim a line on they can claim indirect costs as a single line, but that needs, because for your jurisdiction, you're they might be filling it out. I get that, but you're the one who's actually billing to us. So their indirect cost would still be that single line item as a direct cost, which I can show you. Let me see if I can show you how that looks.
Yeah, this is Tim, guys. I think, and correct me if I'm wrong, Dee, but I think Tuesday she might have been asking about the indirect cost calculator. Like if their subrecipient fills out the calculator, I think was her question.
If the subrecipient fills out the calculator, they're going to fill out just the sections that are above the subaward. If you want to claim, if your jurisdiction is going to claim the indirect costs for the subaward, you'll have to do that separately, like as you've reimbursed your provider. Thank you, Tim. That was helpful.
Dee, let us know if that didn't answer your question. And then, Gio, did you say someone's hand was raised?
Yeah, it was Maria. Maria, if you want to, I think
she just put her question in the chat.
Oh, okay.
Our subrecipient for rapid rehousing and then they charge us indirect of 15%. Is the indirect that they charge us a direct cost for us? The answer to
Yes.
that is yes.
Yeah. Let me see if I can pull up here. I'm hoping that this pulls this up.
And you can share your screen
I am
Tuesday.
working on it. There we go.
Awesome.
Sharing in
There it is.
Yep.
Zoom has never been my strong suit. So hopefully this is something that you can understand. So when your provider is claiming their 15% IDC, the line is gonna look like this. It's gonna be a direct cost, your provider's name, and a 15% IDC for provider, and then the amount here. When you're claiming an indirect cost, it's going to look like this. It's going to be indirect cost. There's no provider because there's no check being written, right? Indirect cost for reimbursement to your provider would be 50% of whatever you've reimbursed to them. So this would be for your subaward. But this is how it will. This is direct cost is how it will look for your provider if you're our grantee. Stop sharing.
Maria said thank you Tuesday.
Good. Did I stop sharing? There we go. Hopefully that took it away.
Fantastic. And was that
Thank
it,
you.
Amanda, in terms of
Yeah,
questions?
that's it for now. Oh, nope, never mind. Dee Dee came back. I
Yeah,
did
it's a
mean the
comeback.
calculator. Thanks, Tim. I was hoping they could put their lump indirect cost total in the subaward section and not have to detail out the financial assistance sections. But we can talk offline when we meet with us and LASA. Okay. Sounds good, Dee
So
Dee.
and you need to remember that your provider is subject to indirect costs at the same level you are. So they also have to apply the modified total direct cost rate. So they can't claim indirect costs for the things that aren't eligible for indirect costs, like rental assistance and those kinds of things. So they really should be using, if not the calculator itself, because you don't have to require that, they should be using some form that makes it so that they can consistently claim eligible costs at the right amount.
But we highly recommend if you don't have a calculator like we do, which was developed by David Munoz, which was our contractor when we had ESGCV, who is the most
Brilliant.
knowledgeable person that we know of in indirect costs. We highly recommend that you utilize that tool with your subrecipients because it's the best tool that we know of. So I would say please use that if you can, unless you have something better or another form of that form.
I agree. You're welcome to use it. And if you reach out to your grant manager, we can get you more information that you can pass on to your providers or your subawardees so that they understand that they also need to be doing the modified total direct cost. This is something that's been in place for a long time. We had not been applying it, and this is something that we've been correcting. So this is us catching up to the accounting practice the way it's supposed to be.
Yes. And we can definitely go over it more when we talk with you and LASA. They've been taking indirect costs for years, and if this is different, then we'll need to review with them. Okay.
Yeah, it's true. It is a change. We understand that, and that's why we're covering it multiple times. And honestly, anytime you have questions, you can reach out to me. You can reach out to the NOFA box. We're discovering problems as they come up and trying to solve for them, and so that we can get clear solutions for everybody across the board. So we're happy to work with you because we need to discover how people need us to adapt.
Okay, we only have 1 minute left, and I want to keep on track with the time. So take over, Anthony.
Okay, if we can jump to the next slide. Thank you so much, Tuesday and Amanda, and everyone for your great question. The last few slides are just for a wrap up. We have the ESG link to the ESG webpage, plenty of resources there for you, and the NoFA inbox contact. Next slide, please. Also, you can follow us on our social media, Facebook, X, and LinkedIn. Next slide, please. And we're always looking for new folks to join our team and help us to implement our mission here in California. You can always check our website for new openings. Next slide, please. And we'd like to take this moment to thank you all for attending all of these sessions this year. It's always a joy to work with you, and we hope that you have a happy holidays, and we will see you soon. Take care.
Thanks, Anthony. So everyone, I just want to, before everyone leaves, just one last quick suggestion regarding our presentation today. So I know this was a lot of information for everybody. So we understand it's a lot to wrap your head around, and you may still have questions in the future. So in regards to your RFFs that you're currently working on and will be working on, if you want to send us drafts of your indirect cost calculator, of your DER workbooks, please reach out to your ESG representative, and please email those over to us. And we want to make sure you guys understand everything. And so before you submit your RFFs and eCivis and you want to make sure you're doing it correctly, please feel free to email those drafts to your ESG rep, and we're happy to look over it for you and make sure and provide any feedback or corrections, just so there's not a lot of back and forth in eCivis, because we all know that can become a headache sometimes. So please feel free to ask your questions, send us drafts of what you work on, and we'd be happy to look at it. So thanks, everyone.